This is London with MarketHedge. Let's pay attention to Bitcoin. We're going to look at the 4-hourly in terms of the over-under on the 20 moving average, a real solid technical feature, and particularly on Bitcoin, it's what we've been paying attention to along with that RSI. Do not forget it, along with the MACD. Do not forget it. Let's dig into the details. This is London, former hedge fund owner, private, non-SEC, not financial advice. Now, 4-hourly histogram on the MACD has remained positive. Very important. That has been a key metric as we have seen. Price roll, boom, to the downside. Precedingly, MACD 4-hourly histogram caught it, yes, and to the upside. This was a nice move to the upside. Don't forget it on Bitcoin, up to that new all-time high, exceeding $125,000 on several exchanges. So to the extent that this has been just a key code perfect, nearly with some divergence along this area, but a key metric to pay attention to, that 4-hourly histogram. Do not forget it. Now, we're also looking at that 4-hourly RSI. Will the sellers try to re-engage? Let's dig in to not just the pickup potential here, but let's dig into what over the last 24 hours I specifically did in the back with the VIP. Now, shout out to J-Mac, shout out to Luke, and shout out to Daniel. What's up, guys? In terms of this, I entered orders in yesterday from the 20 moving average when we were at this level down to the specific standard deviation on the 4-hourly. Why? Well, I told everybody, I cut a quick short take film and said this is my hedge for the 20 moving average. Now, pay attention. You know, I say hedge, you're saying all you're doing is stacking orders. Okay, but listen, pay attention. If I'm hedging the 20 moving average, what's important is I am counting on a rebound to that level. So I'm stacking in longs. It's always going to be longs or shorts if it's a hedge, okay? And it's going to be that way because I'm asymmetrically approaching the hedge line, which in this specific instance was the 20 moving average, okay? So if I were hedging it from the upside, it would be shorts, meaning I'm getting paid if and to the extent we re-hit the specific 20 moving average. Yes, and in terms of that, I would be paid on the shorts on the upside, longs on the downside. And why the stacked or laddered orders? Well, I'm also hedging to the extent that I'm not picking any specific point and putting all of my capital in right here and saying, yes, I'm trying to go to the upside. No, in fact, for that recoup, in fact, what am I doing? Well, I'm placing my margin intentionally structured so that it is incrementally, pay attention, it is incrementally given exposure. My batch of trades is incrementally given exposure. You got it, okay? So that I'm literally hedged in the classic sense of the terminology, that I am not fully exposed in my margin position on any one level. Rather, it accumulates as we go down to my target. So that was my threshold from initiation down to the lower standard deviation, and the placement of incremental margin is by definition, me hedging my capital. So in addition to that first definition where we said, well, we're heading back asymmetrical to a target to the upside, we also have that margin component wherein things are stacked to the downside. And that's really not just a classical feature of risk preservation, but also due to the fact and the unknown that the move could have gone halfway. We know this could have gone halfway and then back to the upside. It could have, frankly, gone, let's say, a fourth of the way and then cruised to the upside. We know this. So to the extent there's that unknown factor, it reinforces that incremental usage or utility, let's say just deployment of margin, and it reinforces that asymmetric move that we're looking at when we're hedging. So kind of that 1, 2, 3, just think of it in terms of asymmetric, yes, incremental, yes, and the unknown. The reason for the stacks in the hedge is that it is unknown in terms of the exact level to the downside, which we may encounter. So to the extent it was positive, congratulations. That was a quick redo on the video that I gave the VIP last night. If you missed that, please do pay attention to it. Now, we're at the 20 moving average on the 4-hourly. I will encourage you to not just pay attention to this line. This is the upside line. Now, if we're going to look at shorts over, if I'm going to continue to hedge over the 20 moving average, right? And I'll say in this specific instance, I'm a bit hesitant to do that. The longs I liked. Why? Well, we do have an upside target. For me, this is a very nice upside target. This line of resistance across the way here. So if the bulls can get busy, first test is they must beat this 20 moving average to establish an upside target of that top side band, which we just saw precedingly last night. But anytime that I have an upside target, I don't like to get caught with orders stacked on the way, you got it guys, to a higher upside target. This can be fatal in terms of your trade strategy. Absolutely. In fact, these longs were nice in terms of an upside potential to said target. Now, with that said, I already took on these trades. For what reason? Well, to the extent that Bitcoin wanted to be a little pesky and identify some sort of a descending triangle framework, then I just thought, guys, it would be safer to let this, let's just say this contrast and technicals play out just a bit. I may be interested, of course, in additional pickups in this level, in the same hedges and the same pickups long underneath this level, but I'm cognizant right now that aside from the aberration from last Friday, I've got nearly a flat bottom support here, which could play out as what? We know this contradiction in the market could play out as a descending triangle, or it could play out as a double bottom. So anytime you're thrown into this, I'm going to be, rather than on the 4-hourly or the daily, right, powering into big hedges, I'm going to be on the lower time frames, cranking through smaller trades. That's just it. If you're not familiar with the lower time frames, I recommend 100 rounds, which is 100 trades at high leverage, and I recommend that with limited margin, just to get used to the market, get the wheels churning, get those dynamics in order so that you become consistent. Only when you can book 5 successful trades, then think about raising your margin, and not until you can book 5 consecutive trades at a time and place of your choosing, right? Find your groove before you ever increase that margin. Now, in terms of the specifics, we've got a 3% differential for a hit percent back to the upside on the 20 moving average on the daily. I'm cognizant of that. I'd like these dynamics just immediately. It's like I'd like to fast forward one day if I'm going to make a larger move on the macro. With that said, I've got my upside target, kind of a downside target here as well too. Let's let this play out just a bit, and in the meantime, we'll focus on some of these international factors and let's say geopolitical issues and the extent to which they start to resolve themselves, which they typically have. In terms of being bullish, we're going to be looking at, again, this key to resolve would be the MACD on the daily, which right now is dropping. Pay attention to this one specifically because that MACD on the daily, the histogram is dropping. To the extent that we get any upside potential, we really need this to turn around and for us to have some sort of a positive deployment on that histogram to support the upside price action. Otherwise, it can lead to the divergence we saw last week and somewhat of an interruption in terms of any plans the bulls have. So, guys, this is London with MarketHedge. Surprised that the bulls haven't just powered in yet at the same time. I don't know. This Chinese the China issue has been pulled once, twice, 3 times throughout the history, many times more than that. Really, don't you guys agree in terms of upsetting the crypto volatility and leading to some panic? So I would assume that those of you who've been around for a while have been able to digest that precedingly and are doing the same now. Remember, never overexposed to any higher price, always with heavy cash reserves, ready to double and triple down at any level. This is London with MarketHedge. We'll be back to you soon. Hopefully, I'll be bringing you another trade very soon, and I appreciate your time. Thank you guys so much. We'll talk to you soon. Take care. Bye-bye.